The audio is connecting. Thomas, Anthony, how are you?
Yeah, good. Can you hear me?
Yep. I can hear your mic there. That's great.
Lovely.
And
How you guys been?
yeah, good. We've been pretty busy actually, both in the world of DeFi and getting everything all sorted on the Imperial Wealth launch side. So yeah, it's been good. Obviously, markets have been a bit more entertaining as of late.
I have indeed.
How about yourself? How's everything going?
Yeah, going well. Busy with work, but finding a couple of days a week to look at DeFi stuff, which is fun.
Nice. You've got yourself through the course, I assume, by now.
I have, yeah, completed the course. And
Nice.
sort of dabbling into a few projects at the moment.
Yeah,
Cool.
which chains are you off across mostly at the moment?
Optimism, Arbitrum, and some Ethereum.
Beautiful. What are you in, Anthony?
In Equalizer and Camelot, and I've gone into a few of the Uniswap V3 pools with the concentrated liquidity. Just having a bit of a play around there.
Are you managing the ranges on that yourself?
I am, yeah.
Okay. Yeah, that's it. That's interesting. There's a few platforms that are cropping up that do that for you.
Yeah, I had a look at Pickle, and I was just sort of wanting to get a bit of a feel for how it all works, just doing it myself.
Yeah. Pickle does it. I think Popsicle, Ice, if you have a look, they've just had a massive run over the last couple of weeks, because they look like they're finally releasing their working product on that does that.
Okay. What chain are they on? Or are they across a few?
They're on a few, Popsicle, but Ethereum chain, I think, mostly. But yeah, they're worth looking at. I'm pretty sure Arrakis does the same as well. But yeah, there's a few out there that do, like, if you are interested in providing liquidity in a Uni V3 manner, you got to know what you're doing. It's not as easy as a Uni V2 sort of 50-50 LP pool, because when the price,
I've been reading up on the shorting strategies basically within there. I was sort of interested at sort of looking at that side of it.
Yeah, cool.
Awesome. We'll jump into it. There's been a few email in later and throughout the week that can't make it to tonight's AMA, so it might be a bit more tight with the group in here. But it is saying that it's recording this time, which is always good. So I'll definitely upload it after and allow everyone to jump on and get through. But one thing that I do want to tap on is just how important it is, the community side of what we're building here. Where we're going to get the most value out of DeFi, and where yourself as a DeFi investor is going to get the most value is by tapping into this community and contributing as much as you can. I know sometimes it might feel like you're sitting there going, oh, geez, this is a bit of a novice question, or, I don't really want to give my opinion. But I guarantee you there's other people out there that have the exact same questions, and by you even just putting that question out there, we can find things that we weren't aware of as well. It happens very, very quickly. This is a really new industry, and the more eyes that we have across it, the better it's going to be for everyone. So it has been really awesome to get that community channel going. It's really nice to see people are comfortable talking in there, sharing ideas, sharing plays that they're working on. That's the whole aim of what we're building here. So what we're going to go through, by now, I really would have hoped that everyone who's in the first round of students that purchased the DeFi course pretty much at the end of last year has at least finished the course once by now. That would probably be a bare minimum from, I guess, expectations where we want everyone to be at the moment. And outside of that, I also would have hoped that everyone's at least set up their MetaMask wallet, dabbled around on putting at least a bit of Ethereum in their Ethereum chain, and maybe setting up a few other chains such as Phantom, Optimism, Arbitrum. These are common ones that everyone seems to be kind of dabbling in now. So if you haven't done that, do it with the smallest amount of funds, get $10, $15 across, whatever it is, $100, doesn't really matter. But just get your hands dirty and start getting into those chains. It's so important. There's nothing.
I was gonna say, particularly Phantom, like, you know, the transaction fees are, you know, a cent or less. So that's, you know, if you're worried about, you know, playing around, just go in there, and it's going to cost you nothing to put things in, stake, unstake, put things into LP, un-LP it, whatever. It's not going to break the bank.
Exactly right. Yeah, I mean, I think Phantom was one of the first chains that I started playing around on. And yeah, as Clint said, nothing really breaks the bank. It's a couple of cents to do anything. And there can be some really lucrative plays on there. Phantom's actually had a bit of breath of life brought into it this year. And I think I read today, Clint, that it's actually something quite interesting. They're launching kind of a Phantom virtual machine.
Yeah, so it's basically like Phantom is like all the other EVM compatible chains is based on the Ethereum virtual machine at the moment, but what they've been working on is upgrading that and replacing it. And they're talking about, you know, it's already quite fast, but they're talking about increasing the speed by 8 times when that comes in. So, yeah, that's you'd have to think that that's going to generate interest.
100%. That along as well as Andre being back, you know, the general crypto market starting to come back around. I think Phantom should have, you know, quite a bit to offer coming forward. And we've seen even with a project like Equalizer getting so much tension, getting so much volume coming through it in such a short amount of time. You know, there's big opportunities hanging around there as well. So a couple more housekeeping things. So we are going to be moving into launching the official DeFi Academy. So we've released the course, we've released the community. We're running kind of like a beta of the DeFi Academy in the community section on our website at the moment. So if you haven't gotten onto there yet, make sure that you do. You just go onto the Imperial Wealth website, log in to the back end, the members area, and then just click the community button. You'll have access to the DeFi course channel. And in there, we're all sharing kind of and asking questions and sharing plays that we're doing. And really important that you're in there. We've started to put some plays in, and me and Clint on the back end have been doing some more advanced plays. We've avoided kind of clogging it with really things that are just going to make you feel a bit uncomfortable for the moment. But we will start to be putting together all of the plays that we're doing into a more formal DeFi Academy with step-by-step instructions on how you actually get in, what we're doing, what our strategy is, and then if anything changes, we'll be updating in there. Just the other day, we were playing around with Equilibre and Mare there, Clint, which came from the Optimism Network fork, was it? We had Velodrome fork, which is essentially what Equilibre is, and then Son Finance is, I guess, the Mare side. Is that correct?
That's it. Yeah. So they've those platforms have forked onto the Carver chain. So this is a new chain. Well, not brand new, but it's not as popular as the others and growing. And you know, it's solidly fork season at the moment. Like, you know, Velodrome, Equalizer, Thena on BNB have all, you know, done massively well. It's a good model. That flywheel kicks in, and you know, it seems to be going well. So Equilibre is a solidly fork based on Velodrome. That's just launched, like really just launching now on Carver chain, and Mare is a Son fork on Carver chain. So and Son itself was a I guess it's a Aave's, you know, sort of fork, Aave compound fork. So yeah,
and for anyone that, you know, isn't familiar with these platforms, it's pretty much like a borrow lending platform. You know, Aave was the main one. You know, then you got Son Finance is the borrow lending platform for Optimism, or the most popular one anyway. And largely how like I know a big question that's coming through to me is like, how do you guys find these strategies? How do you find these plays? How do you find these protocols? And funnily enough, and it's something we're going to be starting to release a lot more with the DeFi Academy, a lot of it comes from airdrops, right, Clint? You know, you're using a platform like Velodrome, or you're using a platform like Son Finance, and then all of a sudden, you know, you get an airdrop from this other platform that's forked off it. And what they're doing, it's a marketing strategy. They know that there's a user base of however many thousand people using that platform. Why not give them something for free so that they come over and start using your platform? And that's exactly what they do. They give you an airdrop. It might be 100, 500, it might be $1,000 worth of their native token. All of a sudden you're like, cool, I've got this. You can either sell it, or maybe I'll lock it up on the platform and start using this platform. Oh, cool, I can actually earn more interest on this platform than another platform. You start bringing your liquidity over, and that's exactly what they're trying to do. So that's largely how a lot of these plays come up. It's from getting airdrops. And I mean, Clint and I were talking, a lot of the DeFi students who are now starting to use platforms like Equalizer or whichever ones, you may then start to get airdrops for the next fork of those types of platforms, and that's, you know, where you start building things on.
For sure. You're basically setting up your on-chain history for the future for other platforms to airdrop to. And the things that they airdrop, it's not just like people who use it. Like you know, I've got a lot of airdrops from staking or from locking my Velo token. So I, you know, received a Velodrome airdrop. I immediately locked away into a VNFT and started using it to vote, and that's been lucrative in itself. But then these other platforms, they're looking at people who are committed, and so, you know, locking tokens for 4 years is pretty committed. So they'll airdrop those people you know, rather than someone who's just provided LP.
Yeah, that was a classic one that I said the other day, even myself, didn't I? I was like, oh, you know, am I gonna get an airdrop for this? And you're like, yeah, probably not if you're just farming the liquidity. You usually need to lock up and really be a part of that. Not necessarily the governance side. You don't have to be a part of the governance, but you technically are when you're locking and getting those VE tokens. So that's really good. So that covers a little bit. Again, just to list those networks that you probably want to start getting across. You've got Optimism. Recently, Clint and I have started getting into Carver. You've got Arbitrum. Phantom is one that you probably have all heard of before, and Ethereum. Those are probably the ones that we'd like to see you at least familiar with and starting to use. And then if you're wanting to pick up any more and put them in the chat and say, hey, I'm also using this, then you're more than welcome to do that as well. So Clint, there's a platform that we've been using, Taro. And we've been playing around with a bit of leveraging, I suppose, strategies. One of them I did put into the chat just the other day, and I wouldn't mind tapping into that tonight. So what I'll do you want to basically give a bit of a rundown of what Taro is, Clint, and I'll grab it up on the screen?
Yeah, it's pretty it's nice and degenerate. So where the term DeFi degen comes from is degenerate, because you basically you get to leverage farming. So you've got insanely high yields already for farming on some of these pairs, and what Taro allows you to do is to borrow tokens against the LP collateral, mm-hmm. and form more LP, so that you lever up your LP position. So instead of earning 200% APR, if you lever it up 4 times, now you're earning 800 and something, or slightly less because you have an interest cost, so maybe 700 APR, and 700%. I mean, right now at the moment, I can see I got a Son airdrop. It's had a big run. I unstaked half of it, split it into Son USDC LP, and then I've levered it 4 times. So I'm getting 830% on my Son USDC. And you've got a small position there too, leave it up.
Yeah, I followed you in on the dig and play, but Yeah, so basically, you know, it doesn't always have to be big balances that you're putting in. You can see in this play here, I've just put a smaller balance in. We've got $200 in there. And exactly what Clint has said there, you know, you can leverage things up on here, and you can basically just get you get a liquidation price on either end. So if SON gets to 14 cents, or if it gets to 77 cents, as you can see here, then this will liquidate my whole position. I'll lose probably most of the $200 odd that I've got in this play. However, what I'm doing by leveraging up is, instead of earning, what was the base amount that we were earning? I think it was like 70% or something.
I'll just let me just have a quick check on that. But it'd be 100 and something. Actually, if you hover over that little question mark there.
Yep.
On the APR.
Yep. Minus the borrow that I'm paying.
Yeah. So if you get that 892 and divide it by the leverage, so divide it by 4, that's it.
So 205%.
Yeah. And so what it's doing, you can see here, he's got the Velodrome SON USDC LP position, which is there, and then he's borrowed some SON tokens and some USDC tokens and the platform automatically grabs those borrowed tokens and puts it into more LP, and it does that so you're borrowing those tokens from other people. Now, other people might not want to leverage, farm, but they might go, well, actually, I wouldn't mind just lending my SON tokens and earning 18%, or my USDC tokens and earning 17%, which is just above, and they don't have any risk of being liquidated. They're just lending it out for degenerates like ourselves to borrow and farm. So the risk here, and there is risk, and you should be cognizant of that, is that if the price swings rapidly, you can lose. And why that's the case is because of the borrowed amount. So it's you can get liquidated if SON rises too much, because you've borrowed tokens, and if it triples in price in this situation, the value of the borrowed SON is going to exceed
what I
the
put
value.
in there.
Yeah. So, but you're earning 800%. So you're making a call that's compounding your LP. So you're making a call that you'll outpace that. And what we can do here is, if the price did, say, double, if that went from 34, if SON went from 34 to 70, and we're getting close to our liquidation price there, what we could do is rebalance the range, and we do that by borrowing more USDC, and you can just simply borrow the USDC value, and then swapping it to SON, and then repaying the SON. And so what you're effectively doing is moving the range up. So suddenly your liquidation price on the upper end will have moved up, but the liquidation price on the lower end will have also moved up.
Yeah, it's exactly right. And once you start doing this, I mean, it can be a little bit nerve-wracking, like anything. Can be a little bit nerve-wracking getting into borrowing and leveraging and repaying and all these types of things. But when you start doing it, it opens up a whole new world of strategy. You can start to kind of go through the marketplace on Taro, and you can have a look at, okay, well, I've got some USDC, or I've got XY token. You may just want to go in here and lend it to people for a return on your investment. And so one thing that we were doing the other day is we were coming in here and looking at utilization rate. So when, as you can imagine, supply and demand, if there's $3,600, like you can see here in this Oath USDC pool, there's $3,600 in there of USDC to be lent out, and the total amount that is borrowed is $3,600. So it's very hard to loan from this pool. Therefore, they are willing to pay 95% for anyone that puts liquidity of USDC in that pool. So what you can start to do is scrape these, look on these platforms, keep an eye on them, and start hunting opportunities where you have these types of coins just sitting there in your wallet. You can click on here, go in here and lend it. You can deposit it in, and you can actually lend it on the platform and earn that 95%.
Click on the lend tab. That just up. There's a tab.
Yep, there we are. Sorry, you can supply it.
Yep,
so you pop your USDC in here, and you're going to get the supply APR, which is 95%. Now, obviously, if you go and put $3,600 here, that's going to reduce the APR substantially because you're doubling what's in the pool. But if you go and put $100 or $200 in here, you'll still get between 70 to 80%, and that's on this pool. There's definitely other pools out there that have a lot deeper liquidity, and you can go and put thousands of dollars in, and you won't even affect that utilization rate. And you'll still be getting a high yield.
A return like that on stables is huge, and you could have like a stack of stables and just kind of rotate it around, and just look around. Okay, today it's good in this pool. Tomorrow, again, if you're doing it on a chain, this chain here is Optimism. Transactions are fairly cheap, 10 cents, 15 cents. So it might be worth your while to move it around.
And it is a bit more of an active strategy. You can see right here, obviously I set this up the other day. I've been busy the past couple of days. I really should utilize this a bit better. I'm only getting 3.84% on this one now. I was getting something like 70%. So I really should withdraw the balance that I have in here and then go and put it into somewhere else. Why
don't you move it to that? Why don't you move it now to that?
Okay, yeah, let's do it.
That's USDC now, isn't it?
Yep.
Can I ask you guys, so is the exposure now to Taro, to all this velodrome? So once you put your money on, if that all goes south, it's gone?
Yeah, good question. So there's contract risk here. So it's not exposed to the price of the Taro token or the velodrome token price. So those things could go good or bad. You're not exposed in that sense. What you are exposed is contract risk. So if Velodrome was hacked, or you've deposited your funds in Velodrome's liquidity pools, and if there was some way of the hacker, stealing money from a liquidity pool, now Velodrome has been audited. That those liquidity pools are fairly solid code. They've got billions of dollars in them right now. If you look at all the platforms. So, but yes, you are at contract risk every time you interact with the platform. So you put funds.
But more hacking, so it's really the smart contract should do what you've.
That's it, and then again in this situation, you've gotten a Velodrome LP token, and then you've put that into Taro. So then you're exposed to Taro's contracts, I suppose, where should someone be able to steal the Velodrome LP tokens from Taro's contracts. But again, it hasn't happened yet, and there's a lot of money in there. So and there's people who are very obviously incentivized to do it. And there's been there's hacks that happen in DeFi all the time. And generally, if it can be done, it's done.
Yeah. Thank you.
No, great question. So yeah, going back to the example, exactly what I was saying there, obviously I've been a little bit lazy on this one. I'm only earning 3.84%, but by supplying my USDC. And so now let's go through an example of what we should do. So we can head over to the markets tab like we were looking at before. We can go into this setting here, and we can look at utilization rate. And then what we want to do is cast our eyes and look for some supply APRs of USDC with a decent amount of supply. We don't want $5 in there and we go put $300 in there and the APR is gone before we can do anything. We're only working with $300. So if we put that 300 in there, then it's around 10%. So what we can do is we can come through, we can start having a look at where the liquidity is and what the API is offering. So that's probably my best one at the moment to put a couple $100 in. Let's have a look around though. So we've got $7,000 in here, 9,000 in here. That's not too bad, but we reckon we can do better. And this is just on the Optimism network as well. If we really wanted to get into it, we could start looking at different networks, go onto different chains and have a look at everything that's available. But for the sake of this example, let's go and put it in this one. So first step that we need to do is come out back to our position and withdraw it. So come into the Lend tab, we're withdrawing this USDC, go hit withdraw, go the full maximum amount, approve the contract. Confirm it. Wait for it to confirm. All right, that's done. Now we can withdraw it. Wait for it to withdraw. When we're going through these examples, it's not a bad idea, guys, to jump onto the platform and follow through with us as well. Obviously, I'll do it a little bit quicker than what you'd feel comfortable doing it the first time, but always good to have the platform up. So after we finish the example, you can have a look for yourself as well. So go back to the market, find that pool that we were in. So we want to sort by utilization. So this is the one that we wanted to pop some in. We'll click on it. Head into the Lend tab because we want to lend that USDC. We're going to supply it. Again, we're going to need to approve the transaction.
Yeah.
So maximum, I've already done it, so that's good. And then we can supply in it. And see right there, we're only going to earn 66.75%. That's because we're going to affect that utilization. We're going to add an extra 10% of what the total supply of this pool is into there, which is going to open up more, like make that a lower utilization rate. And obviously then the APR is going to be a bit lower. Still 66% is really good. So let's go ahead and do that. And we'll go and...
Yeah, I was going to say the algorithm, ramps that interest rate right up to incentivize people. So, if there's a lot of demand for borrowing on that particular pair, and people have borrowed it all, the utilization's high, that interest rate ramps up. And then, people like Will who are hunting, are going to look at that and then move their capital in there and allow more people to borrow.
There we go. That's done. So that'll go in there now. And now it's told me I was earning around about 66%, which is a bit better than what the banks are offering.
Go back to that dashboard. It should have updated now up the top there. There it is.
Here it is now. Instead of earning lazy 3%, we're earning 66%. So you got to keep an eye on it a little bit. I might wake up in the morning tomorrow, have a look, see what it is. If I'm playing with really large amount of capital in bigger plays, then I'll be looking at it, throughout the day. And yeah, really good to start getting your confidence up with these borrowing and lending platforms. Another one that we could go through, but we may leave it to another AMA because we covered a bit on borrowing and lending now, is Abracadabra.
There was a question. Yeah, there was a question on the Imperial Wealth chat, and I apologize, I haven't logged in there for a little while. It was a little while ago, and I think at the time there wasn't any lending against TriCrypto, but that's since changed. So there's and definitely not financial advice for anyone, but if you have Bitcoin and Ethereum and intend to hold it, you really can't go wrong with putting some into TriCrypto and earning yield on it and being able to borrow against it. So Yearn Vault that's paying something like 18% net APY on TriCrypto, and Abracadabra has plenty of MIM available to lever up. So I recently bought some more TriCrypto, and I instantly leave it at 2 times. So I had an amount, put it in the Yearn Vault, put it into Abra, leave it at 2 times. So my initial position is now 2 times what I had. I have a dead amount against it. And instead of earning 18%, I'm now effectively earning 36% on my original underlying capital.
Mm-hmm.
And that just and it's compound. So what it's actually doing, so what's the Yearn Vault doing? The Yearn Vault is getting your TriCrypto, putting it in Convex, earning Curve and Convex tokens, selling those Curve and Convex tokens back into more TriCrypto, depositing that back in and compounding the position. And that Yearn Vault is doing it automatically for you in a gas efficient manner because they're working with millions of dollars, which is great. So you keep most of that yield rather than doing it yourself. And you just get more and more TriCrypto tokens over time. And just as a refresher from the course, TriCrypto is an interesting asset in that it behaves like a volatility muted version of Bitcoin and Ethereum. So because it's a third USDT, it's basically like a smoothed out version. So if you're looking at long-term hold of Bitcoin, Ethereum, you're not interested in the peaks and troughs. You're just interested in that sort of, gradual over time increase. Well, you get to have exposure to Bitcoin, Ethereum, and earn yield on it and be able to borrow against it.
Yeah, it's pretty substantial yield being offered at the moment for some of the most stable major coins out there, Bitcoin, Ethereum, and then obviously the most stable being Tether, all in a pool together, earning 19.2%. Isn't too shabby at all. So the steps, if you were looking to get into something like this, you would come to the Curve Finance website. You would have your assets on the Ethereum chain already. You would need Ethereum, you need USDT, and you'd need wrapped Bitcoin.
You can deposit, unless you have very large amounts, you could deposit just one, and it would effectively split that into the 3. So say in this situation here, you've got 1,300 USDT, you could just deposit that, and when you do that, it would automatically split it into equal amounts of each.
Exactly right. So you would come in and you would do that. You would approve that, you would deposit it, and then you're going to be given an LP token for TriCrypto. What you want to go and do with that is you want to head over to the Yearn Finance Vault. Is that correct, Clint?
Yeah. So
and should I go head over to it? Yeah. Is it in the vault?
Yeah.
And then
Curve 3. Yeah, it was there. Actually,
is it?
See Curve 3 crypto? There it is.
Yep, here it is. So you would come and you'd put that LP token into this vault here, which is a Yearn Finance vault.
Click the wrong one, Will.
What was that? Sorry. Oh, my bad.
Curve 3 crypto. There it is.
Curve 3 crypto. My bad. There we are. Yep, coming to here. And as you can see, it's earning 18.93%. The reason that you're putting it in here, though, is to then be able to come to a leverage platform like Abracadabra. And as it says here, leverage it up. You can basically deposit that Yearn Finance LP that you're getting into Abracadabra, and you can leverage things up. So as Clint said, he's leveraged his up 2x. And now instead of earning what was 19%, he's essentially borrowed twice the amount as what he's put in and leveraged up 2 times. So then he's earning 2 times the amount of yield on that as well.
So you're exposed to basically 2 times the price increases and 2 times the price decreases at that level, right? So what that means is if TriCrypto halves or more than half, just over halves, instantly, you would get liquidated, which means you lose your capital.
Mm-hmm.
Why I'm prepared to take that risk right now? One, TriCrypto, if Bitcoin drops by half, it doesn't mean TriCrypto drops by half because it's a third USDT. So Bitcoin and Ethereum would have to drop by more than half for TriCrypto to drop by half. So that's one reason. And the other is as it compounds and earns yields, the longer it goes on, you're ending up with more TriCrypto tokens, and so your loan to value ratio will drop over time, naturally over time anyway.
Exactly right. So I think that's probably enough in terms of, yeah, like one thing before we move on from borrowing and lending, it's really important to get comfortable with it. You don't want to be in a volatile market. The market starts absolutely taking off, Bitcoin's soaring through 40,000, 50,000, 60, 80,000, and you don't feel like you can lose. And, oh, I want to start leveraging up to take advantage of this massive run. And then you don't really know what you're doing. And then the market starts coming back the other way and you can get liquidated very quickly. It's not the right market to try and start getting a feel for leverage when things are very volatile. Right now, whilst things are a little bit more stable, is a really good opportunity. And of course, with small capital to start with, for everyone, you know, who's completed the course and are getting a little more comfortable with getting into certain plays, to start doing these types of things. You won't ever feel comfortable unless you just start doing it. So start with something that you're willing to lose. I would really strongly recommend anyone watching this video to go and do some TriCrypto play. Go and put, you know, $100 worth of USDT into that pool. Go and put it into the Yearn Vault, and I'll post this in the community chat after, so it is a bit more step by step for you guys, and you've got the links there. Go and get your Yearn Vault LP, and then go and pop it in Abracadabra and get a feel for leveraging things up.
The only thing I'd say with that is that it is on the Ethereum chain what we're talking about here, and gas can be a killer. So yeah, you know, be careful. Don't leverage up. You can leverage up way more than 2 times. Don't bet the farm with any of this, please. But you know, do be aware that it's going to cost you some gas to do that. So you know, it does have to be a position that's worthwhile. If you do want to just play around with Yearn Vaults or you know, TriCrypto vaults, there are Yearn Vaults on other chains. You won't be able to perhaps leverage them up, but it's still a nice place to just have you know, Bitcoin Ethereum position that's, you know, compounding gains even if you haven't borrowed against it.
Yeah.
When you leverage up, is the cost of the leverage built into the return that you're looking at?
Yeah, good question. They'll have an interest. So if you go to Abracadabra, perhaps, let's look, connect your wallet. So it comes up with the and then go to that TriCrypto collateral assets just there. It should be the Yearn Vault one. That's it.
This one here.
Yep. So you can see there, it's a 7% interest on this one. Now, the good thing about Abracadabra is that is a fixed 7% interest. So on something like Taro, where you know, the interest rate flexes with utilization, you know, what might be profitable one day can be unprofitable the next day if you know, suddenly there's a lot of demand for borrowing and they've driven up that utilization rate and the interest rate ramps up.
Mm-hmm.
This is a fixed 7%. So you've got time to plan. So you say, okay, well, that sounds like a lot, but 7% interest isn't a lot if you're earning, you know, almost 40% on the collateral. You know, your APY is outpacing that 7%.
Yeah, that's great.
Quite comfortably, you know.
Absolutely. And I think, yeah, so just that final point there, as I say, when markets are you know, markets are never one directional, but I mean, for anyone that's been around in crypto for more than 3 or 4 years, you probably felt that euphoric feeling of it's pretty hard to lose in a bull market. And when things are going that way, it is important to be able to feel comfortable using this type of leverage. You can really set yourself up with small amounts of capital. You may only have, you know, 100 to 500 bucks in a play, but if you can leverage that up 3, 4, 5, 6 times, and earning 5, 6, 7 times the interest, as well as if you're getting capital gains, then you can have these, what we usually call it, kind of moon bags. You have a small amount in there, but if that goes to plan, it can really turn into a substantial amount. And when you have big wins like that, you know, usually what I will do personally is I'll fold those big wins back into really low risk plays. I might turn $5 or $1,000 into 10,000. I'll sell off 8,000 of that profit back into just more stable plays, like even just Bitcoin and Ethereum, or some more major coins. So
I'd consider Try Crypto as a good place to put gains.
Yeah, good. Yeah, very good point.
And the other thing you can do with this is, so at the moment we've been talking about leveraging our position, so which, you know, borrows it, and it does it all in one transaction. It borrows money and then auto converts that into more Try Crypto. But maybe you don't want to leverage. Maybe you just want to borrow against it in a simple way. So you might have, you know, $20,000 of Try Crypto, which is, you know, okay, I've got a Bitcoin Ethereum position. This is my long-term hold. What, you know, say it is in the bull market, and you want to take some of the profits or take some out, but you want to, you know, you're not quite sure if it's going to keep running. What you can do is just go to that borrow tab there instead of leverage, and just borrow their stablecoin MIM against it. And, you know, say you had 20,000, say you borrowed $5,000, and you can do what you like with it. You could take it out, you could spend it. You could, you know, invest it in other plays. You could just sit it earning more yield somewhere else. You know, there's a multitude of things you could do with it. But you'd still keep your 20 grand just with a loan against it. So and that money to spend, and, you know, that was my strategy last bull run. I you know, ended up with a sizable position and proceeded you know, at the top to take large loans against it, and cashed out that way. So, you know, it gives you that optionality of, okay, because you can never pick the top. So if it keeps running, then great, I'm still exposed. And if it doesn't, then I've got a stop loss. At least I keep what I borrowed out.
Exactly right. Yeah. So a couple things there as well. The more that you get across different chains, and the more that you get comfortable with borrowing and lending, the more that you're going to start to notice things on different platforms. You'll see, why is this platform offering 30, 40, 50, 60% yield, whereas this other platform's not? And you start to it's following the money. You start to realize where liquidity is being shifted and why. And that's one of the best ways to keep up to date with what's going on in the market, and making sure that you're taking advantage of the best plays out there. And the more that you're exposed to, the more that you're understanding, the more that you're going to see these different types of opportunities. And ultimately, that's the game of DeFi. The game of DeFi is shifting your liquidity around, and taking advantage of the best opportunities out there. So yeah, again, really, really important. You know, leverage can be nasty, can be addictive, can be dangerous. So just be careful with it. Don't get overboard with it, but definitely learn it and start off small and start to understand it. That's what we would want you to get comfortable with for the moment. Clint, anything else whilst we're kind of on this curve Try Crypto leverage topic, or does that sum it up pretty good?
No, I think that's good. I think there were a few questions that came through to cover, so maybe we just quickly go through those.
Yep. Yeah. So I've got a few, and also I think someone wanted Tapio to to be had to look into. If you want to give a run through on that whilst I'm getting some of these questions up here.
Which one's that, mate? Tapioca?
Tapioca, correct, yeah.
Okay, so yeah, so Tapioca DAO is it's an abracadabra competitor actually, that hasn't launched yet. And it has different tokenomics and different structure, but it looks, from the outside, it looks the goods. They're taking their time to launch. I believe it's going to launch in sort of March, April.
Yeah, end of Q1.
And they're aiming to be a better abracadabra, I guess. We'll see whether that works. The abracadabra's advantage is that it has very large established MIM liquidity, which is their stablecoin. So for Tapioca to do the same, their stablecoin will have to be, they'll have to have large liquidity to enable those big borrowings, and which generate the fees and whatever. So I'm certainly watching it with interest. I will try and take a position at launch, if I can. But I'm not betting the farm on it or anything like that.
Yeah, absolutely. And as we kind of get closer into that launch date, we'll be talking a little bit more about it, especially on the DeFi Academy. But for the moment, it's really, like Clint said this to me. He sent me the link to have a read. It was a Medium article about what Tapioca is, and it actually is really, really good for anyone that's serious about understanding DeFi, as a bit of a summary of all areas of DeFi and what's happened in the past, where things have gone wrong, what we've learned as an industry. So I strongly recommend try to get through it. I got the warning from Clint that it is a bit of a heavier read, and it is, but strongly recommend if you can get through it, you'll start to get a couple of light bulb moments and understandings about the industry. So I popped that one into the community channel already. I'll go back tonight and I'll pop that article in there again. And then, yeah, anyone that's has the time, I strongly recommend good night reading to get through that.
It's good. It's good in that, they seem to be pretty serious in that they, as you said, they've looked at things that have worked and haven't worked in various platforms, and ways of incentivizing liquidity, ways of incentivizing things, and encouraging. They've looked at game theory in terms of, you have that sort of 3-3 type thing that was popularized by Ohm and Wonderland and all the rest. So they looked at what worked and didn't work, and they've tried to develop a system that they think will be superior, but it remains to be seen, obviously. Do you want to? So these questions will. What are the key indicators that a project is struggling, and when should you look at exiting?
Mm-hmm.
It's a really good question. If I guess to begin with, if you're super worried about a position, it's probably time to take a little bit off anyway. If that's something that you're worried about. But really, it's the liquidity. You've got to watch the liquidity. So if people, it's not just the token price, it's whether people are withdrawing liquidity from the pair of the token of the project, or if it is a DEX, they make their money from trades, and people want to trade where there's deep liquidity, and if the liquidity starts evaporating, there'll be less volume of trades and less fees, and therefore the value accrual to their token will decrease. So it's generally liquidity. That's the one to look at. When things are going well, you'll see TVL rising, you'll see the liquidity pool of the token itself growing, and when things are going bad, you'll see the opposite. So.
And it can happen pretty quick as well. So you'll definitely have some big wins in DeFi, You'll hopefully not have some big losses, but there will definitely be losses along the way. Nothing usually lasts forever, you know, and sometimes you just got to, a really important thing that I've come across is try not to get emotionally attached to anything. The more that you do well in something, the more you're going to feel like it's your friend, it's your baby, it's your, oh, you know, you don't want to hear anything bad about it. But at the end of the day, they're all just crypto projects. They're all trying to do the same thing. Everything's trying to gain liquidity and make some money. So try not to get emotionally attached to it. Look at it logically. If things are looking like they're getting pretty sour and you've got money in there that you're not willing to lose, you know, take some out. Don't be scared to take profits. There's always another opportunity that comes along, and you can take advantage of it, of the next one. That being said, also don't fall in the trap of having paper hands as well. You know, don't pull all of your everything out. You know, always keep some exposure in there in case that, you know, it pops off. But that's something that you need to manage yourself, is the risk there.
Or use the opportunity to test yourself. Like Equalizer was probably a classic example there, right? It had a massive run up to $5 from like 33 cents. And Will and I were talking about it, and Will was happy to take profits because you can't lose taking profits, and that's true. There was a natural point to question it. It's like, you know, should I do the same here? Should I take some out? And then, you know, you kind of almost then reconvince yourself of why you still think it's undervalued or whatever. And I just, in my case, in that particular project, I looked at, you know, its peers. I looked at Velodrome, you know, other solidly forks. I looked at other exchanges on Phantom like Spooky, and looking at the volume and market caps, and, you know, just felt that it was still undervalued. And then it kept running, and I still haven't sold any. I think it's in that particular one, I think it's still undervalued, but that's not financial advice.
That's exactly right. But yeah, good summary there. And really the main thing in terms of like, how do you know when a project's struggling, is it really comes down to experience as well. You can't expect to know these things or predict these things if you're simply just putting it in, walking it away, not keeping on top of what's going on, the new updates that are coming out. You don't have to get as deep as getting right into the Discords and meeting everyone in there. You don't have to do those type of things, but at least every now and then just checking in on your position, you know, comparing it to other platforms that are out there, understanding where the liquidity is coming from, everything like that will help you. And then, of course, if you're unsure, jump into the community channel and ask someone. There'll be someone in there that is heavily involved, and you know, will give you some kind of opinion. But yeah, that's a really, really good question. Thanks for saying that. I think that was Ryan that sent that through, so thank you. There's another one here. So when claiming rewards, am I correct that you should only claim once a week, or at least when you have enough coins that the reward won't be eaten up by gas fees? Awesome question. Yeah, it really just, it comes down to how much yield are you earning, how much are you going to pay in a gas fee. If you have $50 in a play, and you've earned 50 cents worth of yield, but it's going to cost you 50 cents to claim it, well, you're probably not going to go and do that, are you? You're going to have to wait an extra day, 2, 3, or 10 days until you've got it a substantial amount there. I think, Clint, you had your own rule of thumb there. If the gas fee is more than 10% of what you're claiming, probably just leave it for a bit.
Yeah, I wouldn't consider claiming it, you know, unless it was sort of less than that, and ideally a lot less than that.
Yeah.
It depends. It depends on the chain. It just depends on the amount you've got in there, and then the gas cost. So
exactly right. And like exactly what we were talking about before, we try crypto, right? If you go and put $100 in there, but just to approve the contract to even put that $100 in, you clipped $5, and then to go and stake it's another 5, and then, you know, you're obviously going to chew into your returns very quickly. Whereas if you're on the Phantom network and you're paying 50 cents, then yeah, okay, maybe it's all right. So yeah, it's just a bit of a common sense one, I suppose, with the gas fees and claiming.
And if it's super cheap, do it. You can do it as often as you like. Like,
yeah,
you know, go, you know, go nuts, harvest $10 on Phantom. and split it and restake it and do whatever you like, because it's only going to cost you, a cent or two. And then, it's a sliding scale. Arbitrum and Optimism a little bit dearer, and then, Ethereum obviously a lot dearer.
Yeah, and I guess it actually just comes down to maths. How long is it going to take to get that gas fee back? And is it worth doing this? So that's the answer to the question there. And then one also way that you can avoid having to do it is use an auto compounder. Use something like DEFI. Use something where you can just put it in there for it and it will do it for you. That's something you may want to consider when you are on these chains that do cost a bit more to do individual transactions. Cool. So when exiting an exchange like Equalizer, how do you disconnect your wallet safely?
Good question. I mean, disconnecting, something like MetaMask, you can just, log out of it somehow. I never do it. You can lock it. So yeah, that's it. So you press the sort of circle in the top right and hit lock, and then you'll have to type your password back in to unlock it. That's good enough. I mean, that's what that prevents from happening is someone hacking in, someone gaining access to your computer and manipulating your computer through some sort of screen share type thing and clicking and doing things.
The other one as well is connecting to sites through the wallet, and you actually do that through the exact same method. You click on the dot there and like up the top right where you would choose what wallet you're using, not where you would choose the network, and you can go into the connected sites and you can basically just disconnect from sites in there as well.
And that's if you're finished with the platform, you don't trust it or whatever. You would have given them permissions to view your account balances and whatever, and that revokes that permission by disconnecting from the website. That doesn't stop token approvals either, right? So that's probably something worth talking about. Revoke cache is so every time you've approved a transaction, you've approved a contract to spend your cash. So if there was a rogue contract that was some problem with it, if you've approved it to spend some of your USDC, they potentially could take your USDC if it was just sitting in your wallet. So I think revoke cache, which I've just chucked in there. You can go to that, connect your wallet, and you can just have a look at all the approvals that you've ever given. And if you think something's dodgy or you don't, not going to use something anymore, you can spend a transaction to set their approval to nil, essentially is what it does.
Yeah, that's a really, really good tip there as well. So that's kind of like maintenance, security, things to be aware of. And super important stuff. Obviously, don't leave your computer open with your MetaMask wallet open. You can use that function in the big circle at the top right-hand corner to lock your account. And then you can use the 3-dot function and click the connected sites option to see what you're connected to. And the final one, revoking cache, you can go to that link that Clint's kindly put in the chat there and go and actually see and revoke from those websites too. I think that's pretty good for a night. We've got through about an hour of content. I'm really glad that we jumped into that borrow and lending side of things. Just to recap for anyone that joined halfway through or anyone that's watching, we are about to officially launch the DeFi Academy. So if you're a Trading Academy member, you'll be very familiar with what this looks like. but we're going to be starting to actually put up guides on all the plays that Clint and I are doing, no matter how complex they are. We will always be, everything that we're investing into, we're going to put it up. We're going into this. That doesn't mean you have to religiously follow it and you have to do everything we're doing. But obviously, if you are interested in, and it looks like a play that suits your risk parameters and the rest of it, you can follow that with step-by-step guide and or ask in the chat if you need some help with anything. I suppose give 2 seconds if anyone's got anything else they want to add.
Anyone got any questions?
All pretty good. And of course, the community chat's there, and send through by email any questions that you want to be covered in the next AMA, guys. But yeah, looking forward to it. We'll update you on everything that we're doing. Start putting a couple more plays in there now that people are a bit more experienced. And yeah, just the more that you guys get involved with the community chat in there, the more you're going to get out of it. So thanks everyone for joining in tonight, and we'll see you in the next one. Thanks heaps, Clint.
Thanks, guys.
Thank you.
No worries, guys. See you later.
Thanks very much, guys.
No worries.